Hey everyone, welcome in to another daily editorial here on the KE Report. I'm chatting with Darrell Fletcher, and we are, as always, going to be recapping some of the moves that he is seeing in terms of trading around some of the big commodities. We'll talk copper, nat gas, and oil. Darryl is the managing director of commodities at Bannockburn Capital Markets. Now, Darryl, since the last time we chatted, which was tail end of June, we've seen most commodities almost across the board in a sense, grind lower. Now, there's a number of factors, including the fact that we're in, it feels like slow summer trading. However, I want to get your more big picture view on things here. What have you been telling clients? How are you seeing markets currently?
Yeah, thanks, Corey. Like you said, since we talked about a month ago, everything's kind of been a downdraft mode here, some more than others. But really, if you look across energy, metals, even in the ag space, we've just been lower. Like I said, some have been a little faster than others. But I had that question last week from someone on big picture, and I said I'm certainly uncertain. That's kind of how I feel right now on the commodity space. But overall, we are seeing some lower volume and lower volatility, relatively speaking, in some of the commodities. So kind of that summer lull in trading, but down across, really across the board in the major classes. There's just some general global pessimism. I think the China stimulus hopes, there was a big meeting last week, and really nothing substantial came out of that, and that pushed copper lower. They did come back with some monetary stimulus after the fact in the middle of last week, which is a little bit of a surprise, but it didn't do much. But just a general lull. I think you have a lot of unknowns with the elections coming up, central bank meetings. I think you said Canada had cut last week. Certainly everyone's watching the Fed here. So just a lot of uncertainty right now. So that tends to push things lower. The two big things I was kind of watching, doing my weekly internal update last night, kind of watching this week was this front month copper right at the 200-day moving average, and Henry Hub natural gas here in the U.S. falling below two, which both it looks like came into play today already.
Let's talk copper then, because copper, boy, oh boy, May, as much as we've talked about, was just a huge run higher, over $5 a pound. And ever since then, it's been almost a straight line down on the futures market. What I'm seeing here is $4.08. So it's closing in on that $4 level. Is that key technical level? Is it simply psychological level? How do you view that $4 copper number?
Yeah, I think that is a big level. I also think this 200-day moving average, which we just clipped through today, July close at 406, looks like September, the kind of the more the interest is at 408 to your point. I think the moving average is actually right around 409. So we're right at it, if not a little below technically. Big picture on metals, I watched the LME index, the base metal cross index. It's down 7% on a month, but since that peak that you were mentioning back, I think it was May 20th or 21st, we peaked out that copper run over five. We're down about 17%. I think copper's off about 20% flatly from the peak. And so I think technically, if you take kind of the basic news out of the picture, fundamentally, you've got the 200-day moving average at 409, and then the next level's four. You might see some bottoming out here. I kind of hope we do. I know sentiment's been negative, like I said. The lack of a Chinese, economic data has been weak. Plus, the stimulus kind of comes and goes. There doesn't really seem to be a set strategy. There's been a lot of CTA selling, I know, in the market, the copper and aluminum both. But you're starting to see some destocking. I think Chinese inventories have fallen in the past 2 months, some destocking and inventory lowering. So maybe you bottom out here a little bit. But I think to your point, you got this certainly this moving average point, and then $4 are going to be the ones to watch. And those, like I said, that and the natural gas Henry Hub here in the U.S. were the two numbers I'm really following closely this week.
So is there a trend in copper when you look at where prices were pre-COVID? They were stuck really under about 330 a pound for a number of years, going back to 2014, 2013, and then post-COVID after the big drop during COVID seems to have stabilized with about 320 being a base price the whole way up over $5 a pound. You look short term, well, if you're really looking short term, then it's in a downtrend over the last couple of months. You look longer term, maybe you can say that it's still in a general uptrend. How do you view the trend in copper right now?
Yeah, that's a really good point. I was looking at this 5-year chart too, and noting what you said coming out of post-COVID, we rallied up, and 350 seems to be kind of that new base level. So I still think longer term it's really constructive. But if you look back, going back to 21, we based out at 350 and kind of ran up from there. We had a couple dips at 350 range in middle of 22, but since then it's really held. So it's kind of like you're at a new low here. So again, I think $4 is the next level in this moving average and see if it bounces off of here or not. I think we touched off of here in looks like the April timeframe before we had that huge rally through mid-May.
So then nat gas, you brought it up a couple of times. It was encouraging for traders, I think, to see nat gas poke above $3, but it reversed pretty quickly. And now it's looking at closing below $2. Yes, natural gas is volatile, has been for a while, but it almost seems like the spikes in the last couple of years have been, in a way, muted. Does that change in your eyes? Is there enough interest or future catalyst for nat gas to have a sustainable upward run?
There always is in natural gas. It seems like as soon as they think they have it figured out, you can have a huge change in storage can change quickly, and obviously weather can change quickly. I was just talking about this morning. So our spot price, the August contract did close today down below two. In fact, it sold off another 10 cents. So you're 190 on the close for the marks on last day settle. So that was one number I was watching, and it certainly fell below. All spot prices, cash prices, whether it's ACO and all the US Gulf is down below two. So you've really seen spot physical prices come off. But there's really, relatively speaking, there's still really steep contango. The winner is at 310. When you get into calendar 25, these are Henry Hub basis. You're at 325, 26, and 27 in the 360, 370 area. One thing you have seen in the back of that curve is those longer dated strips are definitely coming off, and there's a flattening out there. And that 360, 370 mark, I could look at, okay, where does the curve flatten out? Because the longer term, that kind of tells you where the market kind of supply and demand balance thinks it's going to be. But you really have steep contango from the spot price cash to the front month all the way up into the winter. Production here has been running about 102 BCF a day, which is definitely ticked up in the past couple months. Storage, we're about 16% above the 5-year average now, but that overage has been dwindling a little bit. I know storage number here was higher than expected, but we're these numbers are so small right now. Plus 10, plus 20 is not really relevant. Um,
What about future catalysts like LNG terminals? We keep hearing so much about how those are going to change the market and drive up prices, especially in North America. What are you seeing? Do you even care about that from a commodities trading desk?
yeah, I know last week they said Freeport was turning on two more trains back on, and I think they were going to be pretty much towards full capacity by August. But then the next big bump, so maybe that's 14 Bs. The next big bump is early January. So yeah, that story's been out there. I think it's just taken longer to play out, which is kind of the norm in a lot of these infrastructure type projects.
Oh, that's commodities markets for you, isn't it? It just takes a little bit longer to play out, and market reactions seem to take a little bit longer as well. What about OPEC? We have an OPEC meeting this week, in the same week where we have just, it seems like every other central bank meeting. What can OPEC do to the oil price here, which again has been kind of trending lower like everything else now in that $75 region?
Yeah, the OPEC meeting, I think is Wednesday or Thursday. It's like OPEC plus. I think it's going to be another sitting tight meeting where they don't say much at all and keep their flexibility that they've kept. I think Brent fell below 80 today. WTI, yeah, down below 76, off another $1.30 per SEP. So we're at a 7-week low. Again, here it's pessimism on global growth. Same kind of story as copper. Seen some longs exit once we fell below 80. Still that range that we've been in for so long in 70 to 90 is I think that's still very much in play. If you look back on the chart when we've had these pushes down below 80, and if looking at Brent a little closer actually on this, you've seen some consumer buy interest come in when Brent gets to like 75, 78. So we still got a few more dollars if that's the case on this particular move down. I don't think OPEC's going to do much this week in terms of changing what they've said. We have a big earnings week this week with Chevron and Exxon, but I really still think we're in this kind of 70, 90. until something major happens. One thing getting back on natural gas, because I've done natural gas for a long time from the hedging side, and you have these spot prices at two, cash for cash is actually below two, and you have the winter strip here at least is 310, let's call it. And it's interesting from a hedging perspective. Buyers have such a hard time being really objective around, okay, I can buy winter next year, this coming winter at 310 if I'm not already hedged, or even looking at calendar 25 at 325. Relatively speaking, historically, those are really good numbers. And these things can change fast, but I've seen it time and time again where on the hedge consumption side, they have a really hard time paying that $1.25 premium to where they're seeing spot prices right now with that contango going up the curve. But historically speaking, you've got some pretty good pricing here on going through 25. And again, like we were talking about, you saw it in copper in May to now, things can change fast. And natural gas is definitely one of them. We've had a huge run here in the past year.
Oh, we've seen natural gas can change the fastest out there, it seems like. What about just a big picture comment in terms of open interest, general trading volumes? Are we in summer trading? Is this normal that we've seen kind of lower interest generally, or is there something more at play?
I think it's just a summer lull mainly right now. I think you start to get in, it'll pick back up in August, hopefully. Typically, it's when you start to see volumes pick back up. Open interest, yeah, I'm looking at natural gas. It's been running lower month over month almost since April to May to June to July. So yeah, hopefully we'll get a tick back up here in August, mid to late August. Going to be in the September contract. Going to be in there and play there then, and we'll be watching those to see if they tick back up to more normal levels. Yeah, looking at last August, that's when it started to tick back up.
So overall, summer markets, hey, general pullback in these prices, but again, you take a longer term chart and maybe some of these commodities have repriced, but it is one of those when you see a general decline in price and less interest, hey, it's summer trading. But hey, Darrell, thanks for taking time to share what you're seeing on more of the commodities trading desk, the hedging side of things. We will chat at the tail end of next month to get an update from you. Maybe next month will be slow, or maybe August will be the time where we do start to see an uptick in interest and potentially some renewed uptrends in these commodities. Darrell, thank you as always for your time. I appreciate it.
So